Hi, welcome to PTG and thank you for interesting in us. We are delighted to be here and it seems like it's been a while that from our last visit at SET Digital Roadshow. And today you are with me, Savitri Tantra Ampai, the IR Manager, and Ms. Pachanok Warasak Yotin, the Vice President of Financial and Accounting Department. So I will cover highlights, industry outlook, business overview, and Ms. Pachanok will cover the financial performance part. Okay, let's start with the highlights. Okay, first of all, we just received 3 awards from 2019 ASEAN Business Awards, and we will talk more about this. Second, we have beat the target we set at the beginning of the year. Sales volume for 9 months growth 20.3%, and for third Q, our sales volume growth 21%. For EBITDA growth 55.4%. That's for 9 months, and for the third Q, growth 63%. Third, we already ranked first in B20 sales volume with 32.5% market share. And last but not least, we just launched new Max Reward application and to be more like fancy, easier to access, and we will talk more in the later slide. Okay, let's move on the awards. The 3 awards that we received at the beginning of this month. The first one is Outstanding Performance in the Energy Sector. And for the second one, Outstanding Business for the contribution to the community. For the third award that we received, that's for Outstanding Business for the significant contribution to employee development. So this is the first step that we received the awards from the ASEAN level, but we are looking through more awards in the global level as well. Okay, so for the next chapter, the industry outlook. Okay, so the graph here, I want to show you the movement of the crude oil price, the Thai baht exchange, and the diesel retail price. So with we closely monitor these numbers. That's because last year there's uncommon incident that the crude oil price jacked up more than $70 per barrel, and the government put on cap at 30 baht diesel retail price. So at the time you will see on this chart the red line, that's the 30 baht retail price, and the green line, that's the real diesel price. So last year, with the high crude oil price, led the cap on the diesel price. But this year, the circumstance changes. So for this year, the crude oil price was about $50 to $60 per barrel, with the strong Thai baht currency. So we see that there's a lot of room before hitting the 30 baht cap. So we believe that we shouldn't be seeing the cap this year, as we only have 40 days left before the end of the year. And we think that for the next year, with the low global economy, so the crude oil price shouldn't change much. In the top here, you will see that we calculated the WTI. If the WTI hit $75 per barrel and the exchange rate at about 32.5, this will maybe hit the 30 baht cap. But with the strong Thai baht right now, if it's about 30.5 baht per dollar. So the WTI before reaching 30 baht, it should be around $85 per barrel. So if we think that 35 baht per barrel shouldn't happen next year, that means we are in a safe zone and we have more rooms before hitting the 30 baht per liter. Okay. Yep. So storm has passed and the sky is clear right now. In the marketing margin side. Okay, so when we look closer into the quarterly data in the diesel retail price, there's exciting events. In September, the drone attacked the oil refinery in Saudi Arabia. So the crude oil price jacked up to about 63 baht at that time for the global oil price. But what happened in Thailand was the government applied the oil fund to manage the oil price. So at that time, we will see that it's about 10 days that there's no adjustment in the retail price because the government applied the oil fund instead of raising the price. Okay, but after this the oil attack, the drone attack passed, the marketing margin came back to normal and it's been normal right now. Okay, so let's check out on the oil consumption, Thailand oil consumption. So for the 9 months, total oil consumption grew only 2.4%. That's because of the low economy for the global economy and also in the domestic economy as well. But when we look at the quarterly side, dropped 4.4%. That's because of the seasonal effect. It's rainy season, and the slow growth in third quarter. Okay, for the retail consumption, the same picture, but in 9 months, the growth higher than total consumption. That's grew about 5.1%. And for the quarterly also dropped as well. That's because of the seasonal effect. The impact, the region that get the most impact was the northeastern. That's because northeastern region mainly engage in agricultural activities. So they consume less diesel in the third quarter. That's because lower activity in agricultural. So, and when we look at the region side, Bangkok and vicinity areas got less impact. That's because the Bangkok and vicinity areas consume more on the gasoline side. So that's why this is the reason why we, as a PTG, would like to come to Bangkok and vicinity areas, not only on the coverage side, but also the mix of the product mix in the regions. We also look through it as well. So that's why when you will see in the later slide that in 2013 to 2017, Q on Q we drop about 10%, but in 2018 and 19 we only dropped 5 to 6%. That's because of the movement into the city areas. Okay, for the LPG consumption, still drop, and for the all channel drop 5.3% year on year for 9 months. That's because this is the first year that we see the drop in household LPG. If you look at the bottom part, the total LPG divided in 3 parts. First, in LPG, auto LPG accounts about 26%. Household LPG accounted about 57%, and the rest industrial LPG accounted about 17%. So this is the first year that the household consumption dropped. That signal on the grassroots economy that's still slowing down, for the middle to lower income level. For the LPG auto consumption declined 12%. It has been declined about 11 to 12% each year. That's because the oil price, the lower oil price, the consumers switch from LPG fuel to oil, to petrol fuel. Okay. So for business updates, business overview here. Okay, on the top part, the sales volume, PTG sales volume grew 20% year on year, and for the third Q, 21% year on year. And we can say that we are the only oil company that increased so fast and with this high amount, this high percentage. We still are the pure retailer with 94% retail sale through this channel. And for the bottom part, you will see the product mix. The product mix, the main still from diesel, about 71%. We in the past that I mentioned earlier, we had sold diesel about 80%, but when we moved to the city, we have more gas sale. So right now it's 29%. For the Thailand consumption, it's about 70-30 for diesel and more gas. Okay, so for the diesel update, the government just announced lately that the B10 will be the primary diesel sold in gas stations, and the B7 and B20 will be the optional fuel that sells in the station. With PTG, we see this as an opportunity. That's because we control about 87% of total station, of PTG total station. It's company owned, company operated, and we can control the supply chain. We can mix the product mix to best serve the needs of the customers. And for the next year, B10 will becomes primary diesel in March. Okay. So let's look at B20 sales volume here. So right now, we started B20 service in March, and at that time we only have one station. But in September, we have grown the number of stations that provide B20 to 713 stations. So we became number two. We become number one in terms of B20 market share with 32.5%. That's because as I told you that we are company owned, company operated. We can change. We have controls over the everything in the stations, and that help us to be faster, to have more flexibility over other companies. And we believe that with 3 baht per liter lower than the regular diesel price, so that's still B20 sales volume still growing, and with this consumption help B10 and B20 also help with the Pam Complex, our plant that already start running as well. Okay, with the market share in total channel, the total channel included the retail side, wholesales, industry. With PTG, we focus on the retail side, but we want to show you the total picture first. So right now we at rank third with 13.3% market share. We increase our market share every year, and with this year, we believe that in fourth quarter we will get to more than 14%. It's about 14%, 14-ish percent in the fourth quarter, and we believe that we will get to rank second in fourth quarter this year. And if we can do that, we expect that by next year, in the total channel market share, we will get to rank second. Okay, let's take a look at the retail market share, the channel that we focus on. 94% of total sales volume come from this channel. In third quarter, we ranked third, 15.4%, but we believe that in the fourth quarter, we will get to about 16%. If you look at the 9-month market share, we already ranked second with 15.5%. Okay. In the past, there's no companies that surpass 16%, but we are committed to increase our sales volume growth more than 16% market share. Okay, if we look at Lpg sales volume, still growing. PTG provide right now. We provide the auto Lpg. We have about 100 stations that have provide the Lpg fuel. The sales volume increased about 40% year on year for the 9 months, and also for the third quarters, growing about 29% year on year. Still growing, and we are still positive about going to Lpg as well, because we already I think we already told you that we are getting into the household Lpg, and we already test the market in the eastern side of Thailand. We sell the cylinder in the station, and we get a lot of good feedback on the sales side, and we also think that next year there will be some movement on the household Lpg as well. Okay, so for the Lpg market share right now, we at about 7%. We believe that in the fourth quarter we will get to about 8 to 9% market share with the PT Max Card Royalty Program. That we have a lot of customers that apply the Max Card Royalty Program and also use both Lpg fuel and also oil fuel too, so they can collect the points, whether it's be like Lpg or gasoline. They can collect and point from our brand under PTG. Okay, so right now at September, we have 1,980 stations. So we forecast that at the beginning of the year, our target is 2,000 stations. We think that we will surpass 2,000 for this year. And mainly still company-owned, company-operated, about 86%. And as I told you that the Lpg, we have about 164 locations, so divided into mixed with Lpg and also gasoline together, and also 61 standalone. By next year, we forecast that we will increase about 150 to 200 locations for both Lpg and for oil stations. Okay, so for the other networks besides the oil business, we still have coffee business, Pan Thai Coffee, 236 locations that located mostly in the station, and Coffee World about 89 locations located in community malls, department stores. We have 10 locations of Pro Truck, the maintenance services for big truck, commercial cars. 16 locations for auto bags, the maintenance service for passenger cars. 178 Max Mart convenience stores that we own and operate ourselves. we see a lot of increase in both revenue and gross profit from MaxMart as well. 51 loop oil changes Maxiton. We have MaxCamp, the rest area, 11 locations, and right now we have close to 12 million members for PT Max Card. Right now, not only the brand under our umbrella, but the customers can burn, can earn, can swap points from other partners, more than 100 partners in many industry. For example, the banking industry, or the telecom industry, or the department stores. People can collect points, can swap points, under our partners. Okay, for Pam Complex Updates. So right now, this plant runs about 92 to 95%. We forecast that by this quarter it will run around 92 to 95. We will have regular maintenance the beginning of the year. That's the regular ones that will improve all the machine, and we can get to 100%. Actually, it will go up more than 100% capacity, but let's say that we reach 100% capacity right now, and that will come on time. That's on time with the new mandate of B10. And in the table here, you can see that for current one, B7, that's a requirement for the monoglycerine of below 0.7%, the water content at 300 ppm. For the new standard for B10 that will become the primary diesel in station, the requirement will be monoglycerine below 0.4 and water content below 200 ppm. But our plant with the new European technology, our quality is better than the requirement. It's 4 times better. The monoglycerine only 0.1%, and the water content about 150 ppm. So it's more purified and more quality for the product that distribute from our plant. Right now, there's only 2 plants for that can produce best quality like us. So it's PPP, and another plant it's GC that can produce with the new high technology here. Okay, so we just launched the application, the Max Reward application to be easier access, faster, and more fancy, more beautiful. And this new scheme can support our various partners to use in this form as well. This application also can record your history. Record the customer history, whether they read redemption historical data or the points, and also can search the stores that on our campaign as well. So it's more beautiful in the new look, and we also will launch more tools and variety features to accommodate our Max Card members. Okay, and here's the target that we set at the beginning, 2019 targets. The oil networks, about 2,000 locations, which we believe that will be the target, will surpass 2,000 locations. For the non-oil, we adjust a little bit from 700 to 630. That's because we are more selected and in the locations, and we are focusing on the service, on the same store sales, So that's the adjustment on the non-oil branch. The sales volume, we believe that we will reach the upper level of target, about 20%. The LPG will still, we still set at 55 to 60% growth. For EBITDA level, 40 to 50%, and we believe that this will be the target as well. For the investment plan, we forecast that we will invest about 4,000 to 404 billion to 4.5 billion baht, which we believe that it will go in the budget. Okay, so I would like to send to Kun Pachanok for financial performance. Okay.
Thank you, Kun Savintri, and good afternoon, everyone. Let's have a look into the financial performance of PTG for the third quarter 2019, starting from the proportion of revenue between oil and non-oil products, which was 96% and 4% respectively. There's only a minor change from the prior year and the prior quarter. However, the major change is still from the oil business. When we compare the revenue by quarter, we found that the revenue in this quarter decreased 10.5% Q on Q due to the seasonal oil consumption and the reduction of the oil retail price. On the other hand, when we are looking at year on year, we found the revenue increased by 6.5% because it has a growth from the volume of sale from the new and the existing stations that affect the revenue for the 9-month period increased by 13.2% year on year. For the gross profit, whether it is increased or decreased, it will depend on the right direction of the revenue. But in this quarter, the gross profit portion between oil and non-oil is about 87% and almost 13%. The SG&A expenses exclude depreciation and amortization in this quarter was dropped from the prior quarter because in the second quarter, PTG has to accrue additional employee benefit from based on the new law of employment, which changed the day for calculate the pension fund from 300 days to 400 days. However, this wasn't effect to increase in the EBITDA margin because the gross profit dropped 7.7% Q on Q. Although our company continues expands both oil and non-oil business, which we had to support with the operating expense, especially staff costs, rental expenses, and depreciation. EBITDA and net profit margin still increased year on year because the marketing margin returned to normal since there was no pressure from the crude oil price. And also in this quarter, we has more share profit from the Pam Complex and AMA, which has more effective operation. The ROA in this quarter is 5% increase from the same quarter last year. This reflects a better capability to make a more profit from the invested asset and also more profit to allocate to the shareholder, about 17.7%. If we compare the ROA and ROE with the prior quarter, we found it dropped from the prior quarter because this quarter is the low season of oil business. However, PTG is creating and improving the non-oil business to stabilize the profitability. When you see the trend of the leverage ratio is going down because we try to balance between the investment budget with the operating cash flow, and we need the incremental, the interest-bearing debt less than the growth of profit. In addition, there are high purchase repayment and the maturity of debenture. So as a result, the interest-bearing debt to equity in this quarter slightly dropped from the prior quarter. When you see the operating cash cycle is still negative, 6.92 days, decrease from the last year, which has the operating cycle negative 9.04. It's because normally most of revenue we has no credit term, but in each year we have to keep the stock to support the customer consumption during holiday. Sorry. So although the supplier didn't change any credit term for PTG, but we set the only one period time of payment in December, but normally the other months has the twice a month. For the 9-month period, we PTG got the operating cash flow before change in operating assets and liabilities about 4 billion baht, which more than cash spent for investment about 3.2. So we has but however we have to pay for the change in operating asset and liability about 2 billion. So we need about net finance 0.8 billion baht to support our operation. For the last slide, the total asset as of September 30, 2019 was approximately 21.3 billion baht, increase from the prior year 1.8%. The majority contribution, the total asset, for example, the prepaid leasehold right and rentals and the PPE, because we need to increase this asset to support our business. So this asset will generate the income to be directly affected to incremental in the equity, and we need more short-term and long-term loan to support the business also. And the one that I would like to mention is the cash and cash equivalent in this quarter dropped from the last year because there are debt repayment and the redemption of maturity of debenture. So thank you for listening, and it's time for question.
Okay, so first question. First question, do you plan to install EV charging station? What's your view on EV car? So actually right now we already installed one EV charging station in Vipavadi branch, and we haven't seen a lot of needs from the customer right now. But we just talk about this issue later. 2 days ago about EV cars, and currently it's in Expo, right? Expo event. Expo event. So we need to look at the number of EV cars sales. If it's more than 10,000 cars for passenger EV cars, that might imply that so EV cars already start to to be popular in our country. But for right now, we haven't seen that much at all for the customers that come to charge at Vipavadi station. The view of EV car, we talk about this with the refineries as well. So they expect about 15 years before getting before EVs start to getting popular, about 15 years. So for 15 years that they expected, it's only about half of about 50% of the total benzene cars, which right now benzene consumption is about 30%. So we can say that it's about 15% of total consumption in benzene might migrate to EV in 15 years. Okay. Second question, margin outlook between B10 and B20. So right now we haven't provided B10 yet, very small amount. But for B20, we see that the margin quite similar to the current one, the B7 one. Okay. But for the next year, we think that the marketing margin should be around this range, about 1.8 to 1.9 baht per liter. Okay. Because if we believe that next year the global economy is still weak and the oil price shouldn't go up higher than $80 or $85 per barrel, that shouldn't be any pressure on the marketing margin. Okay, third one, how many gas stations you expect to open next year? How about the capex plan? Okay, so for next year, we plan to open about 200 locations, 150 for the gasoline station and about 50 for LPG station. The capex plan for next year should be around 4.5 billion baht. So it should be around here. So we want to match, as Kun Pachanok mentioned, we want to match the capex, the cash flow for investment with the cash flow from operation. So that that will not be like a burden in our ratio. Okay. Okay. So how different between Coffee World and Pan Thai?
When we about Coffee World, if you are in the city, you can easy to find in the department store. But for about Pan Thai, if you drive a car, go to the urban, you can see the Pan Thai in the coffee shop in the PT station.
Okay, could you please give more details on the revenue and margin between two brands?
I will talk about the revenue first. Now Pan Thai has more revenue than Coffee World because the Pan Thai has more branches in Thailand than the GFA, about 250, right? And about GFA is the branch is less than 100 branch. For about the GP, for the Coffee World is more than the Pan Thai because the GFA has more expensive. For example, the rental for department store is more expensive than the rental for the Pan Thai that pay for the PTG for the PT station. Right?
Okay. The next one, how many max cards you expect for 2020? Okay. First question, we expect about 15 million members. We added about 2.5 million members every year. Okay, how the new application version can encourage people to spend more at your stations. So in the former version of our application, so we have been like learning and developing our application. So this new version will help make it easier to access. They can see their historical data, and it's easier to use. and they can see the real spending on their points, and also they can see more easier with the partners, the shops that partner with us. It's easier to use. So try to install our application and tell me what you think about the new application. So with the easier to access, with the new beautiful scheme, easier to see the data. So people will be more on the redemption side. So if they get more easier to access in the application, they can see their points. Absolutely, that's lead to spending more in our station as well. Okay. Can you please elaborate how you plan to balance cash flows in the current down cycle? How you plan to balance cash flows in the current down cycle? Down cycle คือ
แต่คิดว่าถึงว่าแบบให้แบบว่าใช้เงินให้มันพอกับที่ investment ไหม
I'm not sure about what down cycle means, but if we look at the cash cycles, okay, the cash cycles minus about 7 days right now. So it's quite short if we compare to other retails, but we trying to get more on the minus cash cycles. That's because we can have more money to manage, like to spend, or can think about how to manage the cash flow in the future when we have more cash. And for next year, later onwards, we forecast that the cash flow from operation will over the cash flow from investment. So we will see whether there's good opportunity in more investments and to get more returns to our shareholders, our stakeholders, or we will look to something else that can make more returns. Yep. Okay, thank you for interesting us. Thank you for listening to us. And our sales volume growth still go strong, and we believe that next year our sales volume still surpass 15% growth. And as well as the marketing margin, right now we still positive in the marketing margin for next year. And for next year, Pam Complex up and running, go 100% capacity, which will advantage on time with the new scheme B10 that will be primary diesel in station. Okay, last but not least, we are committed to build strong growth and sustainable returns to our stakeholders. Okay, last, it's getting closer to the end of the year, and have a blast during the holiday season. Drive carefully and think of refuel. Think of PT. Thank you.